Wendell Kelly, man. This is Leverage Your Life. Hello, guys. Welcome to Leverage Your Life. This is a podcast about leveraging your life to level up in life. Today, I got a wonderful person with me today, Miss Aaliyah Janelle. Miss Aaliyah Janelle, she's a financial guru, sort of like myself. She actually did some projects with me in the past, and she said that she have to be on this podcast. so I said, you know what? Let me reach out to her. So we actually gonna do another project in the future. And you and I gotta still discuss that. Mm-hmm. But Aaliyah, introduce yourself. Tell them who you are. Tell them how excited you are to be on my podcast. And if you're not excited, talk about it.
Well, I am very excited and honored to just actually be on this podcast and just, discuss finances and anything related to the topic with you. Like you said, we have definitely done projects in the past and plan to do more projects in the future. So I'm very excited and happy about that. My name is Aaliyah. On Instagram, you don't need to know my personal Instagram, but it's my personal Instagram. But please follow _prosperity finance on Instagram. So my name is Aaliyah. Born and raised in St. Petersburg, Florida. Let's see, I am 28 years old. I just moved to the DMV in 2019. So I was here a year right before COVID, and I didn't really get to experience all of the DMV had to offer until when stuff started opening back up.
Okay.
So
that's last year, right?
Huh?
That's like last year.
Well, I want to say what's this 2021.
Okay,
I had a 2021 summer 2021 was one for the books. I definitely I had a good time summer 2021.
Good.
But to get into the nitty gritty, I started my business. Actually, I kind of started it back home in Florida, but I didn't really. It's the South. As much as people want to say Florida isn't the South, yes, it is. It's the most southern you can go on the map, actually. So as far as the United States, but so I actually started my business down there, but I didn't really see, the mindset is different compared to the North and, and the South.
What you mean by that?
So I don't want to step on any toes. I don't, but it's just it's a culture shock moving up here from down there. I'm not going to lie. Yeah. So it's just the mindset as far as up here, it's a little bit more fast paced. I feel like folks up here, or maybe I was just around the wrong crowd, but I just feel like folks up here are more future oriented. And when I say that, I mean they're more focused on their future and doing what they need to do now for their future, versus down there they're kind of just living in the moment and not really worried about their financial future, not really worried about not really focused on that as far as goals. I got you. You know what I'm saying?
Yeah, I understand.
Yeah, so I saw that and I didn't really want to, be around that. Two, I'm if I'm going to start this business, I need to start it where the money is at, the DMV, DC, and then two, where the mindset, where I'm around like-minded people where it wouldn't be hard to find.
Right.
And so I moved up here 2019 for that reason. And then I started my business. Of course, it was a struggle in the beginning. I actually jumpstart my business. I got licensed. I got my LLC, everything between 2019 and 2020. And so my business, it's funny you should ask. My business is personal financial management.
Okay.
And so I just help people, individuals and nonprofits, which I just added last year.
Nice.
Individuals and nonprofits with nonprofits more so with AP, just making sure their bills are paid, making sure their books look good, stuff like that. And then, of course, personal finance, individuals and families, help them with their budget and understand, how to manage their finances. Okay. Help them educate them and then also assist with that. So the process would be if you came to me and said, hey, Aaliyah, I really, you would let me know what you need. Right. And we would have a consultation. It's free. The first consultation is free. It's 15 minutes. Yeah. And you would just tell me what your goals are. And then once you tell me what your goals are, then I will be able to decipher if I can actually help you or not, and if I'm a good fit for you. And that conversation is also for you to make sure you're a good fit, that we're a good fit for each other, and that I can actually help you, because I don't want you to come to me and say, Aaliyah, I need help. I'm trying to invest in stocks, and my expertise is budgeting and personal finance.
Right.
I'm not gonna I need help with Forex. I'm not gonna help you with that.
Absolutely.
I'll
point you to the right people.
I'll point you to the right person. Yeah. But I'm not going to sit here and just take your money and, you know what I'm saying, and say I can help you when I know that's not my area of expertise.
Okay,
so yeah.
So your area of expertise. So you said personal finance and the budget. When you say personal finance, what do you mean by personal finance? What does that mean?
So I know finance is very like a broad. It's very broad. There's so many different avenues of finance. So. To touch right on budgeting, it's just like personal budgeting, creating a personal budget, understanding how your funds funds are being allocated every month, every week, helping you place those funds in the right vehicles to help you with because your budget is your foundation. So to help you with that, I would come up with a plan with you. Essentially for the entire year, and help you put your money in vehicles to help you essentially at the end of it all build wealth. But before we get there, your foundation is set before I take you to that next level of building wealth. You can't just go right into, I want to build wealth, and you didn't take care of your foundation, which is your budget.
I'm gonna tell you something when you speak of that budget. So people ask me all the time how I got into finance, and so. I do real estate. I've been doing real estate a little bit over 10 years now. When I bought my first house. So when I bought my first house, I seen I always tell the story. I seen the real estate check for the real estate agent, and I'm like, that's the biggest check I ever seen in my life. So
that was your first.
That was my first.
Your first check.
Yeah, that wasn't my check.
Oh no,
I bought a house. I bought my first house.
Oh, okay. Yeah.
And I seen the real estate agent's check. And it was like the biggest check I ever seen in my life. So I said at that moment, I'm going to be a real estate agent. At that moment. But I was still broke then. I wasn't making no money at all. I remember, obviously, I just got my license. And I had a job, but I was never taught budgeting. Yeah. So T-Mobile had a commercial that came out. I don't remember which commercial it was. But the commercial was telling us how if we switch our plan over to them, from whatever courier that we was in, I was with Sprint at the time, that they would give us like a reduced payment and pay all these other things. So what I did was, and the reason I'm telling you is because it was like how I learned about budgeting. I want to hear about what you think about this. So what I did was, I switched to T-Mobile. I called T-Mobile. I'm like, look, man, I'm trying to reduce my payment and I'm trying to get what you sandwich y'all. And they did it. It was like for the first 2 years, if I locked in an agreement, I had a lower than Sprint, whatever I had. I had Sprint at the time. It was a lower payment for them or whatever it was. And then like idea bulb like lit up in my head. I said, you know what? I got all of these companies that I'm spending money on constantly, Verizon, T-Mobile, all these different companies. I said, I'm going to call all of them and tell them that either they reduce my bill or I'm going to go to their competitor. So I did that. Called all of them. They either reduced my bill or they went to their competitor. And then I went and did that. Then I went through my bank statements and nobody told me. I was just thinking. So I went through my bank statements and I looked at all the things that I had in there that I didn't need to have, that was coming out of my account that I didn't need to be spending on. And I was looking at my spending habits. So I started to reduce those payments as well. Like I'm like, you know what, get rid of this, get rid of that. So I reduced all the payments to the major companies that I needed, and I reduced all of my habits that I couldn't really afford. And then I went from like my budget, I think at the time was like $2,000 a month, which is great. I wish I could now, but $2,000 a month. It was like $3,000 I was spending, but I needed $2,000. Then I went under that. I was making like $1,500, so I was making $500 of profit a month. What you think about that? I know I said a lot. What you think about that?
So you want to know what I think about how you went about like
what you did? But how could you like? I mean, is that okay? Is that something that you recommend? How would you do it though?
So to start from the beginning with the whole cell phone situation, right? Okay, yeah. So I definitely would have, called around and just saw what my options were before I made a decision and, compared pricing before I made my final decision and said, I'm going to go with this company. Right. So I think you did right by that.
Absolutely.
And I mean, I think your process of what you did, I think it was pretty solid. What you did, you called around to weigh out your options. You saw what you could and couldn't afford. And then you also, which is what a lot of people don't do, they don't go and look at their bank statement. Because your bank statement, that'll help put right in front of you exactly, it'll help show you what you spend too much money on.
Right.
When you see, Papa John's pizza,
Yeah.
whatever, Panera Bread, Chick-fil-A
Right.
popping up 1,000 times on your statement, that's an easy indicator that, hey, I spend too much money on food.
Right.
So then,
Like
you know what I'm saying? Then it'll help you see what you need to decrease on, as far as like your spending.
Mm-hmm.
And so I think you did good in that sense as well. You looked at your bank statement, you saw what you were spending money on, and then you lowered your expenses.
Right.
So I think those steps that you took were excellent, just on your own, because a lot of people don't do that. You know how many people or just prospects or clients I have on the phone, and I ask the basic questions of, do you look at your bank account every day?
Right.
And like maybe 90% of people tell me no.
Right.
They tell me they don't ever look at their bank account.
Wow.
So they
Really?
literally don't have any idea as far as like what's going on in their account.
Yeah.
So what most people don't know about banks is when they're not looking at their bank account and just spending, and just swiping the card and not really paying attention to what's happening in their account, banks don't operate on the weekend.
Right.
So and then sometimes even during the week, depending on the merchant, when you swipe your card, the systems run differently. So they may not take the money right away.
Right.
It's numerous times where I've seen where I swipe my card and I go look at my account to see if it's gone, or I'm looking at my account just on the regular and I see that a purchase that I made yesterday, I don't see it. That's because some merchants, some companies or establishments, they don't take it right away. They report it at the end of the month. Some companies report monthly and not
really
right on the spot. Right.
Wow. Monthly.
So you may not see that payment come out until the end of the month or whenever they do their reporting.
Right.
Some places do their reporting at the end of the day, or some places, as soon as you swipe your card, it'll come right out. Most places do. But some places, especially like LLCs or just like small businesses or even big corporations, they don't take it out right away. And that's just their reporting and how they do it.
Wow.
And so it's very important that, first of all, you have your budget so you don't even have to worry about that. But two, when you swipe your card, your mind should be like an ATM. Like as soon as you swipe your card, deduct. No matter if you see it in there, if you see it gone or not, just deduct it. Because when you start your day, I know exactly how much money I'm working with for the entire day because I looked at my account.
Right. I was going to ask you, so what do you think about credit cards?
I think credit cards are really good. It's a good leverage if you know how to use it properly, and a lot of people don't, unfortunately. So credit cards, using a credit card properly would be using a card and essentially paying it off by the statement date. So everybody thinks that when you use a credit card, you pay it off, when the bill is due. But what a lot of people don't understand or know is that the statement date is what matters more than the billing date. So you can, let's say, like right now, my credit card bill is due on the 1st of every month. It's about to come up, tomorrow?
Yep.
And so I have just the minimum coming out automatically.
So you won't miss it.
So I don't miss it. Just the billing date is so you don't miss your payment. Have the minimum come out. But typically 2 to 4 business days after your billing date is your statement date.
Yeah.
And your statement date, so even when you pay your bill, even though my bill is due tomorrow, but the cycle of the month is still going until the statement date.
Yeah.
So let's say I pay my bill tomorrow and then Thursday I swipe my card.
Yeah.
So it's gonna defeat the purpose of me. You know what I mean?
Absolutely.
Like if you pay your entire card off on the billing date, you're gonna need to wait until the statement date, until your new statement comes out before you use it again. Yeah, but if you use your if you pay the minimum and then the day before your new statement comes out, pay whatever else left on the card, 2 days later, pay it off, then that boosts your score.
Absolutely.
And then your next statement comes out and then you can immediately use your card the next day.
Absolutely.
So it's just like tricks and
I got you. So I got a credit card. I'm glad you said that because I had a credit card that my due date was the 8th. Well, I still had that credit card. The due date is the 18th. And the statement date on that card is never the same day.
No. It's always going to be 2 to 4
days.
Yeah,
absolutely. But it's not even so. The 2 to 4 days, I agree with that. But then also, that date is still the statement date, not the due date. obviously the 18th is the date, and the statement date is not the 18th. But every month, the statement date is not the 20th even.
Right. Correct.
So
you have to.
So I got to monitor that. So what I've learned, and I learned that the reason I'm just adding to what you said.
Yeah.
Because I learned that I was doing that, paying it over the 18th all the time. I had this card for years. It's still the same date. For 18th all the time. Then my credit score, I'm like, I'll make a purchase. Then I look at the statement, my credit score will drop a little bit, and I'll see a major purchase on the credit card or whatever. I'm like, wow, or whatever, a significant purchase more than the zero balance that I wanted on the 18th. So then I'll start paying on, let's say, the 21st. But then I started to realize that the 21st wasn't the only day as well either. So some days if that statement date might come out on the 21st, then the 21st may land on a Saturday. So then you got Saturday, Sunday, Monday. They don't really put it out to the 23rd now. You get what I'm saying? So no, I've learned that. I'm just backing what you said. Yeah. Really, yeah. Just backing what you said. Yeah.
Mm-hmm. Yeah. So I mean, so you have to pay attention to that. And I have my credit card app on my phone. I have all my banks. I have every app on my phone.
Yeah.
Everything, because when I go and look at my my credit card, the app for my credit card. I'm also going and just checking. I mean, they have all these different tools within the app. So I'm just going and checking, okay, when's my next statement date? Because I want to know when, make sure I have that money to pay off the card.
Right.
And just make sure I know when that statement date is. So I know, okay, my due date every month is the 1st. That's not going to change. But my statement date, that changes. So I want to know. You know what I mean? Like, absolutely. I want to know what day that is specifically, because it does change every single month. So especially since every month isn't 31 days, or it may be 30, or maybe this month is 28. So
do you recommend somebody using credit card versus the debit card?
So credit card definitely has more leverage, because with a debit card, you swipe it, that's in real time.
That's it.
So that money has to be in your account when you swipe it. And then also, but for other reasons aside from the money being there, it's just fraud.
Right.
There's a lot of fraud going on.
That's true.
And so when you try to dispute something on your debit card, you can dispute it with your bank, and they'll credit your account for whatever you lost temporarily. Sure. Yeah. But they're going to go and start a case and fight with that merchant to find out what happened. And if the determination is that it was an authorized transaction, they're just going to come back a month or two later out of nowhere, and you'll just see that amount taken back from your account, and it'll be a surprise.
Right.
And so versus with a credit card, they just put the money back in. They just put the money. They credit your account immediately, and then that's it. You can get it credited back to your account immediately, and then that's it. They're still going to start a case,
right?
But it's a little bit. It's not your actual money being, taken in real time. So it's a little bit safer and more secure with a credit card. I know I have friends that they fund their whole life using a credit card. They pay their bills, everything, just deduct it from their credit card. Yeah. So the money that they get from work, direct deposit it or whatever they have going on, they just pay off their card with it every month. They just dump that money right into their credit card and just use it. And if they need cash, they may keep $100 in their account for cash, or $200, whatever that amount is. Yeah. But I do have friends and know people that literally they just swipe their credit card. That's it.
Right, that's me. So I learned the value of OPM, other people's money. Right. Yeah. So you saving your money for one. You using a credit card. You get to pay those things back by the statement date, so it's back to a zero balance. So whatever money you use, I look at whatever money you use. Make sure that on a credit card. Make sure you're able to pay it back. But also the benefits for credit cards, they got points you can get. You got rewards that you can get. So for example, I always use this Apple card that I got a few years ago. Just an Apple card. I got several cards. Not several. I got a few cards that I have. But just with the Apple card, it's just the simplest way to say it. You get 3% to every dollar that you got. So let's say I spend $100. I get 3% back. So just in the worst case scenario, I spend $100, but I still gain $3. You understand what I'm saying?
Yeah.
So that's just gain. But if you use a debit card, $100 is just gone. It's just gone.
Yeah, it's directly from your checking.
Right. It's direct.
You know what I mean?
Yeah. So the difference is, I spend $100 with my Apple card, right? I'm still using my cash in my account to pay out that $100, but because I paid the $100 off, I gained $3. But if I just use a debit card solely, it's just $100 just gone, no gain. You understand what I'm saying? A regular person, an average person, the median salary is about what, $50,000 to $60,000 a year. So an average $50,000 to $60,000 a year person coming into you, living paycheck to paycheck, got an average size place that they live in, 2-bedroom, whatever. But they trying to level up in life. What would you recommend? What's the first thing that you'll do?
I would recommend the same thing I would recommend a millionaire that's coming to me and saying they need help with just their finances and budgeting. I just really want everybody to understand that, one, you can budget on any income. It'll just be personal finances, personal to you. So you don't have to be making $1 million to be able to budget. Right. You can budget on your 30K income, your 40K, your 50K. Right. It's just, it'll be subject to you and your finances and, you know what I'm saying, your situation. Some people's budgets are going to be higher than others. And that's just the way it is because we don't all make the same amount of money. So that's one. And two, just because you make $1 million or just because you're making 6 and 7 figures, which is big here in the DMV, it doesn't mean that, okay, yes, you have that income, but that doesn't mean
you spend it properly.
You are managing it properly, so essentially you're still broke.
Right. Absolutely.
So somebody that is making $60K and managing their money properly essentially has more money than somebody that's making over 6 figures and not managing it properly, and they're spending more than they're even making in a year.
Absolutely.
So I want people to understand that as well. And so 3, I also want people to know or understand that financial literacy is not a side effect of wealth, right? Wealth is a side effect of financial literacy. And what does that mean? So you don't just automatically learn how to manage money after you become wealthy. You become wealthy by understanding how to manage money and your foundation, and that will help you in turn build wealth and get you where you need to go so that you're able to retain that money that you make. Because at the end of the day, you can be rich, you can want to get rich, you can get all this money, but if you don't know how to retain it, you're going to lose it all. Financial literacy is not a side effect of wealth. Wealth is a side effect of financial literacy. So just to reiterate what that means, you don't just automatically, when you make money or when you start making a bunch of money or whatever that is to you, you don't automatically just automatically know how to manage money. Right? If you don't know how to manage money and you just become rich or you win the lottery, but you're terrible at managing money, you're going to lose it all. Point blank period.
Trust me,
you're going to lose every last bit of it. You may be able to retain it for a few months, but you're going to make some purchases that you don't need. You're going to be spending money that you don't need to spend, which is the same thing as what I just said, but you're going to start making some bad decisions with your money because you don't know how to manage it properly. So it'll behoove you to first understand your budget and your foundation, understand how to manage money, and then you will that will all transition and translate into wealth because you will eventually get there. The more you educate yourself about money, the more you learn, and the more you have a coach, the more you have somebody coaching you through it, the more you learn and understand, you will eventually get to that other side, to building wealth and to actually, retaining that money to leave a legacy behind. So
I love that. So financial, say it one more time and quote. I'm just trying to get down myself.
It's okay. Financial literacy is not a side effect of wealth. Wealth is a side effect of financial literacy.
Okay.
And I forgot where I saw that at.
You know what? That's yours. We're going to keep that with you.
It's just, it made so much sense to me, and I just dug deep into it. It was a long time ago. But yeah, and I'm just like, this is what it means to me. So
right. I love that. So, just to piggyback on that, I'm not going to be long piggybacking on that. Just me personally being transparent, I made a lot of money one time, and I did spend it in the wrong places, and next thing you know, that a lot of money I made disappeared. But then another big reason that was very important that my money disappeared and a lot of people's money disappears is that they forget to pay their taxes. So Uncle Sam is the truth. So you gotta really put a lot of that money to the side on the taxes.
If you make that kind of money and then you end up owing taxes, then
absolutely.
100%. Yeah. So you definitely. Once you start making that kind of money, there is a budget that you need to have for it. Or just not even a budget, just like a fund for taxes. For when that, celebrities have it.
Absolutely,
you know, Kevin Hart has spoken many a times that he has, you know, he's very good with his money. He speaks about financial education all the time, amongst other celebrities, but he has a fund just for taxes.
Me too.
He dumps money into a tax fund all the time. And he dumps money into, he has a way that he splits his money.
Yeah.
And that's why he's been able to, him and other celebrities have been able to sustain their wealth and their riches, because they have somebody managing their money.
Absolutely.
They have an accountant. They have somebody that they sit down with and that they go over. Some celebrities are very detailed and very into the nitty gritty and want to know piece by piece. Mm-hmm. Some celebrities don't have the time and they're just like, handle this.
Right.
But they know that their finances are being handled. Why? Because they know that they themselves are not probably that savvy with it, or they just know the importance of retaining that wealth.
Absolutely.
You know what I mean? And there are many stories out there of celebrities that didn't have that and kind of just spent. Fantasia, before she got to the way she is now, when she first got into the business, into becoming, you know, being the star that she is, she started making good money. And she just started spending it all on family, giving it away, and you want to help, but you first got to help yourself. And she didn't do that at first. And then she learned her lesson, came back, you know, retained all that money. And now she's like, no, like she's better with it. Toni Braxton, same thing. It's just so many, you know, everybody, when you're a celebrity and when you're at a certain status, most definitely you need that. And even at whatever status you are now. Whatever status you are now, if you're making 40K, 50K, whatever, you need a budget, because the universe isn't even going to give you more money until you learn how to take care of what you currently have. So the universe or whatever God you believe in, you're not going to get it until you can't. If you can't manage $100, you ain't gonna be able to manage 1,000.
I agree.
Can't manage 1,000, you ain't gonna be able to manage 100,000. So on and so forth. You need to be able to understand and know what you're doing right now before you get more. Right.
So the foundation is important.
Foundation is very important.
And budgeting is the foundation. What's next after budgeting?
So after budgeting, we would go over to the other side. Like okay, now we have your foundation in place. You have your budget. It's for me talking to a client. You have your budget. We're good to go. You've been doing great. Awesome. Okay, now let's look into retaining all this wealth that you're going to start building.
Absolutely.
You may not be wealthy now, but you will be. And if you don't die wealthy, you'll leave something for your legacy, for whoever you leave behind. They'll become wealthy based off the decisions you made today.
Yeah.
You know what I mean?
Absolutely.
So let's go to that side. So then we would go into long-term investing. A lot of people, when they think of investing, they think of quick money.
Yeah.
Like my stocks. Return on it, stocks.
Yeah.
And stocks is not the end all be all. Stocks is very risky.
It is.
There's moderate, there's conservative, there's aggressive. With long term, it's just pretty much a straight shot. It's just you can either be aggressive with it, you can either be moderate, or you can be just conservative.
Right.
And so you would of course start off very conservative. When you go into, or you can start off aggressive, depending on your budget. But so the long-term investing would be, not a lot of people understand, how much life insurance would benefit you while you're still living.
Absolutely.
People still think of life insurance as
just a death vehicle.
Just something, if I die, I leave this money for my family. And then you have a lot of people, which hurts me to my heart, that don't even believe in life insurance.
I know. It's so crazy.
And it's like, when I hear people say that, I'm like, I don't even want to have this conversation with you. But it's like, I want to help.
Yeah.
But then you also have those people that are like, you try to help, and then they're like, there's no light bulb that goes off.
Right.
But it's like, when will the light bulb go off for our community?
Absolutely.
Right?
That's what I'm pushing.
The other side, and you know what I'm talking about.
Right.
Viewers, you know what I'm talking about. Right? They set their families up from birth.
Right.
And then here we are blaming the other side for what we don't have, but we have all the tools necessary to do the exact same thing that they're doing.
I know.
But it's just, we're so ignorant sometimes and don't want to take those steps and say, oh, we don't need it. I heard somebody say the other week, you know what, it was on Shade Room on Instagram.
Okay. Yeah.
Somebody had passed. It was a celebrity, and the girlfriend of the celebrity, I don't know, it was a celebrity that I don't even know the name. But the girlfriend of the celebrity said, we have a GoFundMe account for him because we didn't think he was going to die so early.
Wow.
What?
People don't understand the benefit of getting a policy early. If you get a policy early, it's much cheaper.
Yeah. Let me tell you guys something about life insurance. Mm-hmm. The younger you get life insurance, the cheaper it is and the easier it'll be to obtain.
Absolutely.
The older you are when you get the older you are and you try to obtain a life insurance policy, these companies, you become a higher risk factor. Why? Mm-hmm. Because as you get older, you start developing health issues. Mm-hmm. One of the two main deciphers as far as if they're going to cover you or not are your medical history and your age. Mm-hmm. So the older you get, it'll be, it's going to be more expensive. But then also, the older you get, it's inevitable that you start getting these medical issues. Yeah, you start running into medical issues. Absolutely. No doubt. The older you get, that's just what it is.
You can't avoid
that. Since companies know that, what for sure they want your medical history, and since you're gonna likely have some type of medical issue going on, you become a high risk factor, and they will rate you based off that. And in some cases, if you've been through some stuff as you've gotten older medically, they're gonna deny you, right. And then they're gonna deny you of coverage, and now you've done yourself a disservice by thinking when you were younger that you never needed it, when in turn from birth you need life insurance because you don't know. You just don't know. Absolutely. It's not a fun topic to talk about.
It's not.
But it's needed and you just don't know.
So a lot of people are afraid because it's expensive, but like you said, the earlier you get it, the cheaper it'll be, and then they just think about I'm gone. So the other flip side to life insurance, there are living benefits as well. Yeah. So you're saying if I'm gone, not just the cash value that you can build inside the life policy, but then also you got living benefits, and you might got a chronic illness, and you like, how am I going to pay for this medication? You get long-term care. You might have terminal illness. You need care. So all those things are life. Those are life living benefits in the life insurance policy. So people don't understand that it's extremely needed.
Right.
But then also to add on to what you said, I'm gonna let you go with it. But to add on to what you said about our communities is suffering just because of that one reason. We will be much more successful in the whole as a community if people died and left well. And me, again, I push that real estate so hard. I've been doing it for years.
Right.
But real estate, it's a great asset, but it's not a better asset than life insurance.
Nothing is.
I
want people to get that.
Yeah.
Nothing is. And just with life, think about it. Just open your brain for 2 seconds and just think about it. We have insurance on our cars. Right. We have insurance on our phones, right? We have insurance on our health. We have insurance on our teeth, on our... Everything.
Right.
Homeowners insurance, everything. You have everything else insured but your life. Why?
And that's the most valuable.
What? Why?
That's the most valuable.
Why don't you have insurance? And you feel like you don't need life insurance because you don't know when you're gonna die. We don't know when we're gonna die. Right. But what is insurance for? In the event something happens.
Right.
I have insurance on my car because what if I get in a car accident? I want to be able to cover it. I have, I'm pretty sure you have homeowners insurance.
Absolutely.
Why? Just in case a freaking tornado or hurricane hits it or whatever. A house burns down.
Right.
You want to be able to have that covered. So just in the event something happens to you, because we don't know when we're going to leave this earth.
Right.
But in the event something happens to you, you want to be covered. And when I say, but you feel like you don't need to be covered because when you're gone, you're gone.
Right.
But the thing is, all your debt, your bills, everything,
the house
that doesn't leave. That's still here.
Put on your family.
It's just put on your family. So why would you want to put that kind of heartache? Your family not only has to cry once because you're gone, but they have to cry twice.
Right.
Because now you've left them a financial burden. You left them bills that they may not even be covered their own bills.
Right.
And now you're leaving them yours. Right. They're going to go to your immediate family. They're going to go after them and garnish whatever. And maybe not garnish it, but if it goes so long without being paid, they're gonna garnish something.
Yeah,
they're gonna take something.
Somebody.
They're gonna come out, and they may come after a house that maybe your family's living in because you're gone. It's just so many different factors that can be completely washed away if you just said, "Hey, you know what? Let me get a life insurance policy," and then not just think small about it and get a term policy.
Right.
Yeah. So with the term policies, open your mind up a little bit bigger than that. If you're really trying to build wealth, go a step further, like you mentioned earlier, living benefits.
Right.
life insurance has living benefits to where you can set your family, your child up for when they turn 18. If you get a policy with an index fund, and we'll get into that later. Probably not
Tell
today.
them come to our event.
Right, come to our event, and we'll talk in depth about index fund. But just know that there are policies out there that you can get to where you open it up, and if you fund it properly and you open up that policy on your child, when they turn 18, they won't have to ask you for another dime.
Right.
You will turn your child into a millionaire.
Absolutely.
And for a small cost. And when I say small, I'm not talking about 100. It's going to be more than that, but it's to build wealth long term. So you can't think about it being cheap. Nothing worth having is gonna be cheap. You know what I mean? As far as like building wealth, you have to do some investing.
Then them policies that you get for your kids can be transferred to the kids too, so
Correct.
that price will be the same thing for up to like 10 times the amount for your kid forever, right? Forever. So that's important.
So all of these are, it's just, it's all a part of building wealth. And I don't want to get too deep into it. I know we're going to talk about it at our event or whatever that we have, but just understand that it's more to life insurance than just leaving money for when you pass. You can benefit off of it now and still leave money for when you pass.
Right. So again, like I said, I had a question for you.
Okay.
That somebody told me to ask you.
Okay.
I'm not gonna get into who it was, but they wanted to know budgeting with a couple. How do couples budget? And I'm not gonna hold you too much longer. Just tell me what you gotta do.
I'm good. I'm good. So what was the exact question?
I don't remember too clearly, but what they said was that I got a budget. My spouse want to be aggressive, and I don't want to be aggressive. How could we budget together?
So you're just talking about married couples, not like
obviously married couples.
Yeah,
we're not talking about couples. Well, hopefully we're not. I mean, well, it's good to budget together.
So let me touch on both because I want to be clear.
I got you. Yeah.
So when you're not married, and I say budgeting as a non-married couple, I mean just creating a budget for like just dating, when you go out on dates.
Yeah.
So just understanding how much money you have to spend on dates, especially as a single person, especially as a single man, not you, but just like in general.
Yeah.
If you're a single man, especially in a big city or just a big area like the DMV, I'm pretty sure you're going out on dates and multiple dates, and maybe not, we ain't gonna get into that. I don't care who you're going on dates with. It don't gotta be the same person, but just make sure you have a fund for that. Because what I hear people saying a lot in the area is dating is expensive. And it is.
It is, yeah.
But that's why you don't date if you ain't got no money.
Right, for sure.
That's just it.
Yeah.
If you don't have the money to date,
you gotta learn how to date without money.
Or learn how to date without it, but also understand that with dating comes spending money. Like at some point you're gonna be spending money. So it's just good to just make sure you allocate funds if you're dating, and if that's important to you, make sure you allocate funds for dating, for doing these different things, and make sure you have a cutoff, a limit, saying, hey, I've already spent $200-$300 this month on my dates. Like I'm not taking nobody else out. Period.
I've been there.
And or whatever your budget, you may have a budget
$3,000 on a date,
and that's fine. You may have a budget higher than $300. I just gave an example.
I got you. Yeah.
Some guys have a budget of $1,000. Some guys have $2,000. Whatever that is for you, make sure there's a cutoff, because what you don't want to do is try to keep up with the Joneses.
Absolutely.
Or try to please that young lady or a young man and spend what you don't have and put yourself in a bad situation for somebody that may not even be around next week.
Absolutely.
Like, let's be honest. So as far as couples goes, married couples, I've actually counseled married couples before with finances, and finances are the number one reason for divorce in America right now. And the reason is because the different views on money. And that's why you have to discuss it prior to getting married. You don't want to go into a marriage without discussing money prior, because it could be a big factor in a divorce factor in your marriage. It could be the main reason why you separate from your husband or wife.
Right.
So you definitely want to have the discussion prior. Understand who's the spender, who's the saver, how the bills are going to be split, right? So I recommend having 3 accounts: his, hers, ours.
Nice. Have
my own account for the spending I want to do. Have your own account for the spending you want to do, and ours would be our bills. Our bills come out of here. Have a joint savings for saving for the house. You know what I mean? Trips and stuff like that. Travel. That's the joint savings. The bills account would be for the bills, the house bills, and we can have everything automated, coming out automatically. That way, we don't have to worry about anything. And why can it come out automatically? Because you would put in a percentage and so would I.
Mm-hmm.
Now the percentages will be discussed amongst the two couple, the
mm-hmm.
two in the, within the marriage.
Mm-hmm.
Everybody's percentage is different. Some people believe in 50-50. That's
mm-hmm.
fine. Some people believe in 70-30.
Mm-hmm.
Some people believe in 60-40. Whatever that is, whoever's making more, however you want to separate it,
mm-hmm.
just make sure. I think it's much easier to just have a joint account that you and your spouse pour into,
mm-hmm.
and that is automated, where your bills are automated from, because you don't have to think about anything. Yeah. And then let's say I put in 30 mm-hmm. and you put in 70 because you make more than me or whatever. Mm-hmm. Whatever I have left over, all the bills are paid, all our bills are together. So whatever I have left over, that's my spending money.
Right.
And I do whatever I want to do with it.
Right.
And same goes for you.
Mm-hmm.
After you put your portion in, whatever you spend your money on, that's you. And mm-hmm. that's me in my eyes. And your account is for you in your eyes. Right. But our joint account, we'll be looking at that together.
Mm-hmm.
And so I think that's much easier because just the differences and just the views on finances, it can be like a huge factor in like that divorce, getting that divorce. Yeah. And so for couples, I highly recommend the his, hers, and ours. And start it early. Mm-hmm. Like have the conversation before marriage, because you don't want to get into a marriage and then you find out your spouse spent $10,000 on something you didn't approve of, something you guys didn't talk about.
So everybody, this is Aaliyah Janelle. Aaliyah Janelle, right?
Yes.
Aaliyah Janelle. What can you tell everybody where you where we can find you at again?
That is prosperity_finance.
Okay.
I am in the middle of just trying to revamp my page and just get with the new times, because I feel like it's a little outdated.
Right.
But I still have some good information on there, outdated or not. So make sure you follow me so I can get my followers up. And so yeah, and then if you need any assistance, I do have a link in my bio where you can just book a consultation. The first one is free. You'll see the prices and everything on my landing page when you click that link in bio.
All right, guys. So I know you guys learned a lot. You got Aaliyah Janelle here. Please follow her. Please stay tuned for our next event that her and I are going to do. Until next time, this is Leverage Your Life.
Yes. Bye.